You have been absolutely played. I mean, we have all been played. From the moment we were old enough to understand what money really was, they sold us one path to success, the property ladder. You know the script. Get a degree, get a job, save every single dollar for a deposit, and chain yourself to a 30-year mortgage. That was the smart move, the safe bet. And for our parents, well, it worked. It was their golden ticket to the middle class. But for us, that ladder has been kicked out from underneath us. That safe bet is now a guaranteed path to mediocrity. It's a 30-year prison sentence where the only thing that you build is the bank's balance sheet, not your own. Today, we're not just exposing the lie, we're going to give you the entire escape plan. The new game isn't about owning a piece of dirt, it's about owning your entire future. Welcome to Crypto Coach Will, where we bridge the gap for everyday investors wanting to build real wealth in crypto. I'm Will Wright, the founder of Mining Store and Imperial Wealth, two of Australia's leading companies in the crypto space. For over a decade, I've helped everyday investors safely and securely set up in the cryptocurrency market so they can build long-term sustainable wealth. In this podcast, we break down the complexities of the cryptocurrency market, everything from investing, trading, DeFi, and even Bitcoin mining. Let's get into it. Today, I'm going to explain why traditional real estate investing has become a rich person's game, and why home buyers are taking longer and longer just to save enough for a simple deposit. I'll also open your eyes to the new way of building wealth, the way that actually works, if you approach it properly. Make sure that you stick around to the end of this episode, because if you don't learn the new way for building wealth, then I guarantee that you're just never going to get ahead. The issue is the average Australian knows that owning your first home is becoming almost impossible, but they don't understand why, and they don't know what the alternative is. There are three key factors that contribute to you never being able to afford a house. Now, the first piece of data that I want to look at is housing value compared to income ratio. In 2004, house prices were 6 times as high as income. In 2024, they are now 8 times as high as what incomes are. This tells us that not only are homes becoming more expensive, but wages are not increasing in line with the increase in house prices. Now, the second thing that we want to look at is the years that it's actually taking to save a 20% deposit. In 2004, it was taking 8 years to afford a house. In 2024, that number is now 10.6 years. Now, this is the most important statistic that I want to focus on, because this is exactly why the script has changed. You see, your grandparents, they lived in a completely different time. The income that they earned was actually enough to afford their first home and save up for that deposit in a much shorter duration of time. Also, the expenses that they were facing were substantially smaller. You see, life was simple back then. Travel wasn't a necessity, lavish lifestyles was not the norm. The working class lifestyle is what actually they were surrounded by. You see, the way of life was secure a job, save for a home, and raise a family. Today, not only is the income to housing ratio blowing out, but the cost of living is substantially higher. We're going to look further into the 10.6 years that it's taking to save for a 20% deposit soon, but let's look at the final statistic first. The third and final statistic that I want to look at is the percent of income that's actually required to service a new mortgage. In 2004, that was 40%. In 2024, it went up to 50.6%. That's right. Half of your entire income is going to go towards servicing the loan after you finally save enough money to put a deposit towards your first home. Now, this is also incredibly important because that puts a 50% restriction on your cash flow. So once you finally actually have enough money to afford the home, now 50% of all of your money is going to be put towards servicing that investment. And you're not going to have spare capital to put into opportunities which might actually get you ahead. So why is your relative income to housing prices reducing? The first reason is because of the low interest rate periods which we recently went through. Think of those COVID times. You can see on the chart below that in 2021, interest rates were almost at 0%. and house prices spiked to absolute all-time highs. Go and put yourself in the shoes of high net wealth individuals. If you could borrow money for absolutely nothing, leverage it into the property market, and absolutely blow up your portfolio with an asset that has proven to win year after year, why would you not do that? Another reason for house prices increasing is due to the lack of supply of new homes. That's compared to the increase in population and immigration. Multiple factors have caused this. First, government zoning and the restrictions that they've been putting. This reduces the ability to build on certain land and therefore reduces the supply opportunity. Similar to the zoning restrictions, we also have had approval and construction rates reducing, which also reduces the supply of new homes. And finally, we have increased population and immigration, which increases demand. To put it simple, reduced supply and increased demand is a double whammy on price spikes. So what does this mean in plain old English? Housing didn't just get more expensive, it got more expensive relative to what you earn, which is the only affordability metric that matters. Now, you only have control over one aspect of this situation, and what you earn is one of them. That is the key. That is what I want to focus on this episode. How can you reduce the time it takes to save your home deposit? By far the biggest mistake that investors are making is rushing into that false dream of purchasing your first home to secure your future. And that brings us back to the 10.6 year statistic that I was talking about before. If you're saving for a property for 10 years and you're doing this by just putting money into the bank, then that is 10 years of opportunity cost. Now, you could have been using that capital to invest rather than sitting in a savings account and watching it erode against inflation. You can no longer afford to just leave cash in the bank ready to buy your first home. You need to be investing your capital into crypto, stocks, hell, Pokemon cards, if that's what you want to do. You just simply need to be more savvy with how you're investing. Just quickly, if you're ready to take your results to the next level, my team at Imperial Wealth Crypto can help. Inside our Crypto Academy, you'll get access to my personal portfolio, strategies, real-time market insights, and the exact plays my team and I use to stay ahead. With our team of analysts monitoring the markets 24/7, we've helped investors catch moves like a coin that's done a 5x in 4 days. If you're serious about accelerating your wealth, click the link below to book in a call with my team of experts and see how we can help. Now, back to the episode. So what does the script look like today? What is the actual solution? First, you need to understand your risk profile. Now, as mentioned, the old-fashioned ultra risk-adverse strategy of just saving your income in the bank for over 10 years is absolutely broken. And if you want to follow that strategy, then it's completely up to you. However, data clearly shows that that does not work anymore. Now, as you know, I'm a crypto guy. I've made the majority of my net wealth through investing into crypto. So I'll now share with you just exactly what my strategy looks like and how it has looked for the past 10 years. So why do I think that Bitcoin and crypto is the best vehicle for the next generation? I basically just struggle to find a mainstream asset that has delivered the same kind of long-term upside, accessibility, and profits as Bitcoin and altcoins. Keeping it simple, here are Bitcoin's calendar year returns for the past 10 years from 2016 to 2025. Now, if we use these 10-year returns, we can get a simple average of about 200% return per year. To make things more fair, because as you can see, there are some outlier numbers in there, like 1,300% in a year, we can compound the average, and that comes to a 70.14% year-on-year return for Bitcoin. You see, the compound average is the cleaner number. It tells you the equivalent steady year growth that matches the actual decade outcome. And that number is about 70% per year across 2016 to 2025. That is the key message. It's volatile, but the long-term compounding potential is on an absolute another level. On top of that, the strategies that you can run within the crypto industry are absolutely on steroids. Here is what I mean when I say that. Let's have a look at the basics of the Imperial Wealth Crypto Academy strategy. Now, our core position is absolutely in Bitcoin. Then, if your risk profile allows it, you can start to take measured risks into altcoins. The number one rule that matters, though, is rotating profits back into Bitcoin. We do this over time. Altcoins are the offense. That's where we make large gains. And Bitcoin is the defense. That's how we protect and grow our wealth. Now, this keeps you from doing what most people do and letting altcoins run your entire portfolio. And it allows you from wearing the full drawdown of when we go into bear markets. And that's the basic guts of our cryptocurrency strategy. The end goal is to compound as much Bitcoin as possible. And in between time, we take the advantage of new altcoins and high conviction altcoins to create short-term profits and purchase back into Bitcoin. So let's tie this back to saving for a home deposit. As mentioned, it's not that property is a bad investment. It's the 10.6 years that it's taking investors to save for their 20% home deposit that is the actual issue. And as mentioned, the only aspect that you have control over when saving for your home is your income and wealth generation strategy. You can't control the cost of homes, but you can control how fast you are saving your 20% deposit. To make this abundantly clear, let's look at the difference between saving cash and investing. There are two concepts that you need to understand when it comes to investing rather than saving. First, when you invest, you are making your money work for you. This is how you really get ahead. When you save money, you sit stagnant and you really just lose money to inflation. The second concept is compounding your returns. If you just save, then you're not compounding your returns. For example, assume that you contribute $10,000 a year for the next 10 years, which means a total contribution of $100,000. And on that $100,000, you earn the savings of maximum 5% per year by locking the funds into a term deposit. Now, after 10 years, you're going to have $100,000 plus about $25,000 of interest. But if you invest and you compound your returns, you can earn between 20 to 100% per year. For traditional investments, you can probably get maybe 20% per year. Think of stocks and property. If you earn 20% per year, you end up with about $259,000. So that would be $159,000 of growth. Now, as we saw before, Bitcoin's average compounded return for a year is over 10 years, 70%. So by investing $10,000 a year and achieving 70% per year, you would end up with a whopping $2.8 million after 10 years. Hopefully by now you've realized the main point is not that property is a bad investment. The issue is not property. It's the years that it's taking investors to save for a deposit to actually get into the property market. You need to be making your money work for you in order to reduce the time that it takes to save for that deposit. If you're following the old saving money in the bank strategy, you're simply just going to be destroyed by inflation and face substantial opportunity costs for 10 years. The only thing that you have control over is how much you earn and how well you make your money work for you. Personally, cryptocurrency has been the best way for me to make my money work for me. If you want to learn more about our crypto investing strategy, then feel free to book in a 30-minute strategy call using the link in the description of this video. I hope this episode has helped you understand why so many Australians cannot get into the property market. Thanks for tuning in to Crypto Coach Will. If you got value from today's episode, then make sure to subscribe so you never miss the latest tips to navigate the crypto market. If you're ready to take crypto investing to the next level, check out the links below where you can book in a call with my team of experts. We place strong emphasis on educating before investing in the market, so take advantage of the knowledge they have to share. Don't forget to follow us on socials @CryptoCoachWill, and I'll catch you in the next episode.